Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, hi, good morning.
Hi, morning. Once again, waking up to all kinds of headlines as usual, tariffs, getting closer to the high-profile meeting. Prime Minister Modi and Donald Trump. So let's see. Plenty of action ahead.
Well, that's right. But the pain in the broader markets, is excruciating, actually. You speak to anyone on the street, they're wondering when this is going to stop. And that's the market for you, right? It gets extended on the upside and sometimes on the downside as well. But the broader market pain is causing portfolios, to really feel very, very wobbly.
I mean, I think everyone feels compelled to meme about this market report, right? I mean, it's just...
If you can't beat it, just laugh at it, right?
No, I think that's the right attitude. We didn't have memes to help 10 years ago. We got memes to help in that sense. I mean, but as they say, right? Let me borrow one of my own. No gain without pain, or whatever. Right? You want to say, I can come up with more, but it's essentially the market, and you got to be prepared for the bad if you got to get the good, and that's essentially what you're seeing. I get this lots of times, whether people are prepared, and newer investors who've come into the market after COVID have seen this kind of decline. Well, they've not, and I think. But you just have to study market history, not that long. I mean, 15 years, 20 years, and every bull market has lots of pullbacks, 15, 20%, 30% pullbacks. I mean, if you want to look at the big one, which was between 2005 and 2008. With that said, let's just quickly, and we'll come back to this topic a little later with our guests, but just a quick word on where we are as far as markets are concerned. So quiet day, we've been starting with Trump headlines, this and that, but quiet day with regards to Trump headlines from last night. Markets remain in waiting mode for announcements on reciprocal tariffs. Will we see them today, tomorrow? And of course, we're also here in India squarely focused on Modi-Trump meeting. That is only tomorrow. I think it'll be tomorrow evening because Prime Minister Modi is only landing in US today. And the schedule says they are meeting tomorrow. There was one more thing, and something I've pointed out with regards to Russia, Ukraine, the war and the ceasefire, which Trump has been talking about. So Treasury Secretary Bessent, and this was confirmed by Trump, is going to visit Ukraine to speak with President Zelensky of Ukraine. And will there be a peace plan which will emerge by the end of the week, acceptable to both sides? That security conference, we'll see. But equities, price action now, nothing very much, flattish. S&P was flat, NASDAQ was down a third. Dollar index pulled back a little bit, about 1/3% down, just under 108 levels, but now about 108.1 or so. Oil prices have gone up about 1.5% to just about under $77 a barrel. So that's, again, nothing big. Now, there was that Fed Chair Powell sort of commentary in his Senate testimony. He kind of maintained neutralish. He was a neutralish zone. There's one phrase, do not need to be in a hurry to adjust policy stance. Basically, they're not in a hurry to cut rates. And the market knows this. Nothing moved in terms of market pricing or anything. March is headed for a pause. First full cut only in September. Total cuts of about 35, 37 basis points for the full year. So there was no change pre or post after the Powell testimony. And by the way, he's going to speak again. And maybe it'll be more interesting because we'll have the CPI numbers tonight. And he'll be speaking before the House. So maybe a little bit more with the CPI numbers in as well. Now, rupee, I just want to quickly close out the FX thing as well. Rupee has been one of the best performers. I mean, it was the best performer amongst currency crosses on Tuesday, that is yesterday. And I think it's got to be one of the biggest moves for the rupee as well in the last 2 days. We'll have to go back into history and check whether we've had this kind of move in just 2 days flat. I don't think so. At least I can't remember, but we'll check that for you. But it's been tremendous. And I think what it's done is it's kind of put fear into the minds of speculators, traders, etc. There's not a one-way move. Come in and collect 50 paisa on the rupee. That's kind of that momentum perhaps hopefully has been now broken by the Reserve Bank over the last 2 days. Now, just to circle in the levels here, of course, absolutely completely washed away. Some of those levels. So we need to see if the 23,005 level will hold. and that is the 78.6% retracement of the recent rise from the lows of 22,786 to the recent high. 78.6 is 23,005. And we kind of defended that yesterday. But a break below that will mean a retest of the lows from where this rally began, which is 22,786, the low which was made on the 27th of January. On the upside, the 40-hourly exponential at 23,396 will come into play. That's the first resistance zone. Hourly average is also, there's a gap with this kind of sharp fall. Bank Nifty still trading above the 20-day moving average and its previous low. The 20-day stands at 49,278. That's the first level on the downside, and then 48,906, which is the low. Here, resistance again comes in at the 40-hourly, which is 49,810. Just about less than 1% away from where we left off yesterday. GIFT Nifty will give you a sense of how we're likely to start with about 40-odd points higher. Markets extremely oversold, due for a bounce, all of that. But we've got to sort of see it to believe it. There are important triggers, especially with this meeting in the US, and markets are nervous, especially you just had to see the reaction on the forex side, and of course also on equities, etc. That could also be a bit of a turning point in that sense, at least to break this momentum, this bear momentum which the market has been in the grip of. Surabhi.
Well, absolutely. And, Nigel, Prashant, also, the issue is that while all global markets are dealing with the uncertainty around tariffs, no one's falling as much as we're falling.
Yeah.
Last 1 month, just 4 weeks, the Hang Seng, despite the Lunar New Year holidays, strip that out, trading days, number of trading days would be even lower, is up 14%. The mainland China markets are up 5%, and where's the Nifty? Nifty is actually down 0.5% to about 1%. So the underperformance is telling, and it's been here for a while. This morning, again, if you're looking at some of the Chinese markets, onshore and offshore, those markets are surging away. As if there's no problem at all. It's some of these markets that should be feeling more of the tariff nerves and jitters, but that's not really how it's playing out. Actually, all the regional markets have now chosen to go with the green color. Let's see if the Nifty, for a change, can be in sync with the rest of the neighborhood as well. The consumer print that markets will await later tonight on Wall Street, the CPI consumer number. The expectation is the month-on-month rise will be about 0.3% and the year-on-year rise could be 2.9%. If it's anything below these numbers, obviously it gives bulls reasons to cheer. Now, for us, this whole mid-cap carnage that's been playing out, at least the cues that I picked up from the street yesterday, is that this is not because of any MF capitulation. There are some redemptions, in mutual funds, but they're within manageable limits. Nobody's speaking of panic with respect to mutual funds. So it's not domestic institutional selling, at least MF selling, that's causing this at all. It has to be obviously what we call as the large dark middle, which could be HNI, family offices, and the direct retail participation that's coming into the market. And also I got two plausible reasons behind this crunching mid-cap and small-cap blow. One, the fact that there's just a tendency to protect profits wherever the profits are. And maybe even MFs are doing that. While they're buying, they're also trying to preserve profits. So that's the churn that's going on. And looking at tax loss harvesting. So if you're sitting on a 30% loss on a stock and you don't think it's going to recover, you want to book it. You want to book that loss and keep it to adjust it against future capital gains. And that's compounding the problem in the mid-cap market. And this is happening both in the mid-cap and the small-cap space. These indices are down between 5 and 6% already in this week, just 2 sessions. Let's see if we get that bounce or not. By the way, today we're getting the AMFI numbers as well. Again, I'll watch out for those numbers very, very carefully to see if that wall of liquidity is still a support for the market or not. The last number, the December number, was a net inflow equity funds to the tune of 41,000 crores. In fact, 41,100 to be more specific. So let's see if that is still continuing. The SIP book was running at 26,000 crores a month in the last print. Let's see if that kind of faith is what investors are still keeping in mind. On the flows picture, it's more of the same, what we always talk about. Again, FPI is selling almost 4,500 crores worth of cash stocks. Domestic institutions offsetting that to the extent of about 4,000 crore rupees yesterday. Quickly, some stocks to watch. I was looking at a lot of the PSU names. Anyway, PSUs have been pummeled badly, but a lot of PSU numbers came in after market hours yesterday. For IRCTC, the revenue is up about 10%, PAT is up about 14%, margins have expanded, doesn't look too bad. NBCC, revenue growth of about 16-17%. PAT is up about 25% and the margin is improved, so these are fine. Aircon is not a great number. Aircon, watch out for this stock. The revenue is down about 11%. EBITDA has fallen almost 48-49%. Margins are under a lot of pressure, so watch out for this. Gopal Snacks is another howler. And remember, like Bikaji, these snack guys are having their own raw material inflation problems perhaps. And Gopal Snacks numbers are extremely weak as well. Big decline year on year in margins coming through. And finally, Vodafone Idea is going to be another interesting one to note. That ARPU increase is really showing up. Remember, it showed up for Bharti, it's also showing up for Voda Idea. The ARPU has now moved up to 173 versus 166. So overall, okay, but again, bigger problems on the debt front. That's what the market will want clarity on. But for starters, yeah, if we can just hold on to an opening bounce, not sell off, Nigel, I guess the bulls will even make do with that.
Some consolidation will not hurt anyone, right?
Yeah.
And guys, when's the last time we saw 5 months the Nifty ended in the red? It's not happened since 1996, when the markets pulled back close to around a fourth, I think 23-24% at that point of time. But that proved out to be the best investing opportunity. So I'm going to start off on a positive note, and I'll end this with a positive note as well. But let's take the top cues today. First, as Subi mentioned, the mutual fund data. That's going to be important because that's caused a bit of a stutter among various participants in the market. So the mutual fund data is something that we'll be tracking in today. The other one is on the global front, and the US CPI data is something that we'll be looking at as well. If we're looking at two technical indicators that you're looking at, well, two of them are important. One is the PCR. Well, that's moved down to around 0.69. Normally at around 0.65 odd, we do see a bit of a bounce from there. And the FI is aggressively net short. Let's take the second point down. Yesterday, they added 11,000 contracts on the short side. The net shorts are the highest ever in absolute terms, in value terms. And, in absolute terms, it's at around 1.84 lakh contracts. And in percentage terms as well, around 85-86% or thereabouts. So the FI is a net short. That gives you one reason to see a bit of a bounce. And the other one is the PCR is at the lower end of the range. Moving to the options data then, the 23,300 call, very, very aggressive writing is what we saw there. In fact, all the strikes, 23,100 call as well. So between them, in fact, you had close to around 90 lakh shares that did get traded between them. So that's the kind of aggressive writing that we saw. Now, one trend that you'll be tracking is the last few trading sessions, the Nifty has been making a lower high and a lower low as well. So you'll want actually to see that turnaround because all the last few trading sessions, that's precisely been the trend. So for today, you'll want this mark to get defended on the downside. And gradually, you'll want to see higher highs as well. I don't know whether we can get so far on the upside, but you'll at least want to protect the lower lows of the day. Moving to the Nifty Bank, yesterday intraday, it went ahead and in fact, it broke that 20 DMA. These are the crucial levels you need to track on the Nifty itself. The recent low, well, that becomes important, 22,780 or thereabouts. That's the important mark that you're looking at on the Nifty. Yesterday's low as well will become important, little south of around the 23,000 odd mark. Let's get the Nifty levels up for you on the screen. And, yesterday's high as well will be the important mark. So that's the important mark you're looking at. The Nifty Bank, crucial. The 20 DMA may be defended yesterday on a closing basis, but that one, in fact, will be the important mark that you'll want to protect as well. And finally, to end it on a positive note, well, the last many, many years of looking at the sensex data, I was looking at a couple of news reports as well, news notes that come out from mutual funds. Well, only 4 out of the 44 years, you didn't see a decline of close to around 10% in a single year. And on most of those years, actually, you ended on a positive note. So, near-term volatility, yes, but sometimes these opportunities provide you as great entry opportunities as well. But near-term pain, no doubt about that.
Absolutely. And more often than not, 9 out of 10 times, Nigel, I mean, these sharp declines,
yeah.
I mean, that's the time to actually deploy. The problem with that is, and I was having this argument with somebody that, the normal, typical kind of thing to do is stay invested. You can't time the market, and that's perfectly fine. But the point is, if you're not able to broadly time and take profits when markets go absolutely bonkers, right, then you don't have cash to buy when prices, because right after those lows come better days, but then you're not buying in at those levels, right? I mean, you're kind of averaging it out. That's fine. For retail investors, it's not possible. But
also what kind of crossed my mind in the last 20 years, when you see deeper corrections, and we've seen far worse, there's usually been a very strong trigger. Either COVID or the global financial crisis or a commodity crash, which happened in 2006-07, I remember. But this time, I don't think anybody saw this coming. A valuation-induced correction. When was the last time we saw that in India? So that makes it interesting.
I must say, we're nowhere near those. 2008, Nifty fell 58% high to low.
Absolutely.
COVID, Nifty fell 38.5% or so high to low, right? So this is 17% as of yesterday's close.
Yeah.
I mean, so we got a long, I mean, those things, of course, need some reason. Sorry, Nigel.
Just one data point that I've got, and I don't have the exact numbers, but all these opportunities, if you kept your, systematic investment going, you would have made money.
Absolutely.
I'll have that data today at around 2 o'clock.
Super.
Historical 21-year, if the SIPs keep running, what's the compounding through such phases as well?
Super.
Well, let's just quickly get in.